If you clicked on this video, you might be a complete beginner in trading, tired of fake Telegram groups, long YouTube videos with strategies that you can't really use, where there's tons of indicators that you need to purchase or difficult softwares to install on your computer. Here, there will be none of that. Just a simple strategy that you can start today from your phone or computer, only with free softwares that you don't even need to install on your computer. And all of this, I will give it in this video completely for free, so just make sure to subscribe. Oh, and by the way, if you're looking for 5 to 10 signals a day completely for free with this strategy, you just need to click in the link in the description and join the public channel where I give you everything for free. We will only see the technical point of view, but of course, when you start, you always have to look first at the fundamental news and economic news that would impact your trading. But here we're going to focus on the technical side, starting with market structure. I will explain to you first how market structure works, what it is, and how you can use it to be on the right side concerning the market. You have only 3 market cycles that you can actually find in market structure. You have the uptrend, you have the accumulation, and you have the downtrend. The uptrend will never, as the downtrend, be a straight line to the top. It will always be big buying movements followed by small retracements and then upside again. The particularity of that is that it works in every time frame, the daily one, but also the 15-minute time frame, 1-minute time frame. It works the same because all time frames are made the same with the same contracts inside them. You can barely see the difference if you don't look at the time frame. It will always look the same. If we check the graph, this is exactly how it looks. You will have an uptrend, big buying movements, followed by small retracements, and then big buying movements again, until the price doesn't go up. It will actually stabilize, and once the accumulation starts, it means we don't really know where the price is going until it gets back down with big movements, small retracements, and then big movements, small retracements, etc. If you want to be profitable, you need to understand how the trend works and where in the trend you are right now. Meaning, the rule that you need to use is once you are in an uptrend, you have higher lows, meaning the lower points of the market, meaning the down of the retracement. It's always gonna have to be higher than the previous one, no matter what the time frame is. If you are in a daily time frame, meaning 1 candle equals 1 day, and you see that the down of the movement is always higher than the one before, and you're going to see after that the highs of the movement are always higher than the ones before, that means you are in an uptrend in the daily time frame. But if you go in 30-minute time frame, meaning 1 candle equals 30 minutes, and you see that on the other hand, you have something like that going on, boom, higher high, higher, and then something goes that, you can see that in a 30-minute time frame, your trend is not an uptrend. And that gives you the opportunity to understand that there might be a shift in the market. You can actually see that in a low time frame. Let me clean that for you. As you can see, the important thing here is to always check that lows are always higher than the previous lows and that highs are always higher than the previous highs, meaning HLHH. Here, you can check how it goes on the uptrend. We can actually take the brush and see that here we have our low. Here, the lows are always higher than before. And as you can see, here our highs are always higher than before. And I just took the actual market. I don't need to look because the market is always in a trend. Uptrend, downtrend, or accumulation. Here you can see that we clearly identify an uptrend. It works. And I can zoom in for you to see better. Here you can see that we have a shift of trend. Why? Because the market is actually accumulating, meaning we don't have a clear vision. It struggles to go up more, and a first retracement is followed by a second retracement. We enter the accumulation phase that you have here in blue, meaning the market doesn't have enough liquidity to keep going up. It's tired. You can see that as someone's running. You're going to have, first of all, you're going to get hotter. You're going to start making movements. You're going to be more strong, more strong, more strong. Of course, you're going to have to do small breaks. But at one point, you just can't walk. You just can't run anymore. You don't have any energy. That's how the market shifts. Most of the cases, institutionals will actually take profit in this area. If you manage to understand that the market is accumulating, that means you know that there will be a shift of trend. And that could be interesting for you guys to take. Here, we can see that the accumulation phase starts, and we can see that the liquidity fails to bring the market higher. There's not enough people buying. Mostly, it's a war. And the war is getting lost by buyers. We have a shift of trend. Of course, you can implement price action concepts here, meaning you can also check on the economic side if there's a potential for gold or Bitcoin, for example, to keep going up. That might be interesting, but mostly that's how you see that only on the technical point of view, the market will shift. And here you can understand that after accumulation, there's often a retest phase. This retest phase means the market will try to trap buyers to make them think that the trend will actually continue. Let me check. Here, that means we have the market failing, and the market will try to go back up one last time so that buyers think, oh, we're still in an uptrend. Let me buy. And they will actually buy the top for banks, big banks, to get more profit. Because when the banks will take profit, the market will go slightly down. And they don't want to scare people. They want you to keep buying so they can get contracts out more and more and more so they can win more money. Meaning there will be a retest phase often. For example, here you have a retest phase. Boom. Or maybe you can check that here it's a bit too late, but you can have retest phases. Those kind of phases you need to avoid. You need to really wait, I suggest, for the retest before entering sales. If you see there's a shift of trend, you want to be first to enter, but you don't want to get the retest, because if you don't have a lot of money on the market, if you don't have big exposition, the retest movement will get you out. You should avoid that. Once the retest is done, often we have the market shift, meaning the previous high will become the new higher low or lower high. Here, let me write that. Ooh, looks good. The retest means one last time we're going to go back on the area where we had the last highs, and it's going to become our new starting lows. Maybe you can see that here. If I actually zoom more clearly, you can see that. Let me take that out for you. Here we had a last high. The market actually retested. You see, it was a fake buy, and it retested the last high and became the new starting low. Here you can see we're shifting, and we're going to go back to the new trend, which will be the downtrend. The downtrend will be lower highs and lower lows, meaning the new lows will be always lower than the previous lows. If you get that, it's easy to understand. If it's not, just go back to the beginning of the video, make pause, write some notes, and you will see that even an 8-year-old kid can understand. Now that you know that, you need to always identify the trend before you enter the market. 90% of the people that I talk to that need help, that send me messages on the Telegram that you can find in the description of this video, when I send 5 to 10 public trades every day, most of them tell me, how can you know when to enter? Because they just see blue or red numbers on their MT4 account and enter because they want to gamble. Don't do that. If you do that, you will never win money. Or if you do, it will make a manipulation to your brain, to your own brain, because you will tell him that you're actually profitable in trading, which is not true. You just had a lucky day. When you want to know how the market will go, you need to identify if you are at the beginning of a trend, if you are in the middle of a trend and it's just a retracement, if you are at the end of a trend, if you are entering an accumulation phase, or if you're getting out of it. If you can see that and identify that, you would have a first confirmation of what to do. Mostly, you should actually follow the trend. There's one sentence that all traders will give you is the trend is always your friend. The trend What I suggest is the first recommendation is try to always stay in the trend. Don't try to go against the trends. Don't try to think, oh, I'm gonna, it's the buyers have been so strong. The price got so up. Let me sell because it's gonna fall at one moment. It won't. You're gonna get wiped out. You've got $400 on your account. You're gonna get destroyed. Don't do that. The first thing you need to do is try to get buys when you are in an uptrend. Try to get sells when you are in a downtrend. And maybe you should avoid taking trades when the market is accumulating. Take buys here. Take buys here. Where do you want to take buys? Second thing. You want to take buys after a retracement. During an uptrend, you need to wait for a retracement and try to get buys mostly after those retracements when you see that the retracement is over. That's a good moment where you can buy. Mostly, even with that, you can be profitable in trading. If you look, we are back to a downtrend. We have the market having higher lows and here lower. Let me wait for the retracements on the upside to be finished. And when I see the price starts to go down, I can start selling. That might be the second tip that I can give you here. Of course, none of that is investment advice in any case. I just give you the things I do on the market and try to get you to use them as wisely as possible. That's the first thing with the trend. Now that you can see that, if you would have followed this concept, you could just trade at any time, any moment, and in any time frame. That's the first thing. Second thing we're going to see during this video, and now this is the chapter number 2, you need to understand that you don't need 5,000 indicators to tell you where the price is or where it will go. The only ruling indicator here that you can actually add for free on TradingView is, for me, the VP. VP means volume profile. It's 100% free, and it will give you mostly where the action is. You will see the prices and the areas where most volume is traded. Here, you can see that there are 3 lines, an up line, a down line, and a sort of red line that will go, it will do it live. It's live between the 2 other lines. The biggest focus you need to have is on the red line. The red line is the POC. It's the point in this volume. It's the point where most contracts are passed, where the liquidity is and where the fight is, where the movement is. In most cases, you would see the price. Of course, the POC is evolving. Today's POC is not the POC of 1 week ago, but you will see that mostly the price would tend to go back to this line. Let me give you a real example, because I know how annoying are those trading videos where you check theoretical concepts and where the person never gives you anything to do. Basically here, I would use all the previous concepts that I learned to you, looking at the actual trend. Here in H1, I can clearly see an uptrend, the end of a downtrend, and I can see that my lows are always higher. What I can do here is actually try to get buys, because we just had a retracement and we are heading back to POC. If I just have to find a trade here in 30 seconds, I would say that there are more chances that we go to hit the POC again, retest the POC again. Maybe there will be a shift of trend and we'll go back to a downtrend after, because our lows will always be lower and our highs also. But in most cases, if you actually have the good trend, you see a retracement, you enter buy, and you go to POC, you target POC, you would have the right move. Maybe not for 2,000 pips, but maybe for 100, or 50. So here I would get buys until POC, and my first TP would be at POC, because odds will be with me. Like probability is with me in this case. So that's the first thing, okay? Identify your trend, try to deal with it, wait for retracements, and enter the trade once the retracement is over and try to target POC if you can and if it's in the right move. Second confirmation. Now, just to end with the trend, because I know the trend is your friend, but we're not going to stay 1 hour around the trend movement. The last thing is to understand that mostly the shift of trend is, as I told you, always with a retest, but mostly you can actually also have intra movements that will look like this. Okay, so always try to understand that the first important detail is the time frame. The more the trend is shifting on a higher time frame, meaning one candle equals 1 day, for example, like here, the more the shift is important. So if you want to use the trend, don't look at 1 minute chart and then think the trend is changing every minute. That's not the case. Here I can look on the daily time frame and see that the shift of trend is not really occurring here. We have a clear uptrend, and for now we're going to keep going high for me. Now that you guys know how you can identify and use trends and the fact that you need to enter on retracements, some of you guys will tell me, how do I separate a retracement of a trend shift, of a market shift? Because as I told you, some retracements will actually not be retracements and will actually be market shifts. How do you know? Because you can see how strong is your movement. Let me explain. Here I took this example. You have the very strong buying movements of the uptrend, and you have very small selling movements. And even in those selling movements, you can see that still you have a lot of pressure. Here, the buying movement is strong, the selling movement is struggling. Moreover, you can see that, which are basically empty candles, prove that there's actually a big fight. So yes, there are some sellers, but they're getting wiped out. As I told you, how strong is your movement? And last but not least, you guys probably ask yourself, all of that is theoretical data, how I can actually know how to enter, when to enter, the exact timing. I'm going to give you that, don't worry. But let me give you a small resume of everything I gave you since the beginning. First, identify trend. Try to look on the market for trend. As you know, trend is here. You can take a screenshot of my head with the graph, and you can actually keep that. If you need it, ask me on Telegram. Link is in the description of the video. It's free. You have nothing to do. You just click on the link, join, and I will accept you in a few minutes. Wait for retracement. So you identify your trend. We're in uptrend. Good. Now you wait for retracements. How can I know if it's a retracement? I check how strong is the movement. Movement is struggling against my trend. I wait for the end of the retracement when buyers are gonna start buying back, and I can actually buy with them. If you trade market shifts, if you actually think, I can see that the uptrend is over, I want to trade the accumulation, or I want to trade the downtrend, then make sure you actually wait for retests, because during your accumulation, there will be a fake retest in most cases that will make you actually back to the normal trend, but it's not true. So make sure that you avoid the retest. You check the retest, you wait for the retest, and then you enter. Last but not least, check how strong your movement. On the indicator side, if you want a confirmation, you can also check volume profile and aim for POC in the trend. Meaning, if POC is higher and you're in an uptrend, probably it's going to go back to POC. If you are in a downtrend and your POC is lower, there's probably going to be a retest of your POC. And if you want the precise entry point, that's where we're going to go, you need to wait for the gap being filled. That's going to be the best trade you can take. All of that gives you simple confirmation on when you can enter, how you can identify when to enter, and it gives you a clear beginner strategy, which was what I gave you in the title of this video, so I'm not a liar, as you can see. Let me show you how the gap filled works. Fair value gaps are going to be determined. Fair value gaps are going to determine where we want to enter. A fair value gap is easy to identify. You take 3 candles,
you have your candle number 1 here, your candle number 2 here, and your candle number 3, which is the gray one here. I can't even draw the number 3, but you can see here. Let me clean that and do it again for you. Number 1, you have candle number, and you have candle number 3, which is the gray one here, this one. So you can see that there's a gap, this top of the first candle and the bottom of the, if your second is not, so if there's a distance, the bottom of the third candle and the top of the first one, there is a fair value. And until the price goes a little bit inside, the price will probably aim for retracing up there. So in this case, if you want to have an exact answer, a good trade in the real market that you can see here, because as I told you, I don't want to theoretical, but the interesting area to enter would actually be aiming for POC. That would give you a nice 2 risk buying trades, probably following the concept. Of course, you can fail the trade. There can be a lot of events. And as I told you, this is a technical point of view. You'll check the fundamental news to get entries, but at least it gives you a real actual market example on how you can use all those. A lot of different previous times where what I'm trying to give you here happens, meaning the price will come to, meaning it will come back where it didn't go and actually go back up following the trend. So here, that will be your last confirmation, and you would have all the things here. Identifying trend, wait for retracements. If you trade market shifts, wait for retest. Check how strong your movement is. Check VP, volume profile, and aim for POC in the trend. And if you want last confirmation for the precise entry point, you need to have a gap filled. So this is how the market works. All of that is technical. If you have the live training sessions with me, so if you want to take the same trades as I do, you have the link in the description. Telegram channel is totally free. You can join, and I live every day with you guys, telling you when I enter, when I go out, and explaining the actual concepts I use. This strategy is simple. You can start it today and have results today. So don't forget to put a like on the video, to subscribe to the channel, and see you